Since 1955, every U.S. recession, with the exception of one, has been preceded by the inversion of the U.S. Treasury Yield Curve. And this is exactly what was flashing last week in the financial markets. So the question is, what is the Treasury Yield Curve, and what does it mean when it's inverted? The United States sells notes and bonds with different maturities. There are short-term notes lasting a few months, and there are also long-term bonds that mature up to 30 years. As expected, the yield for the 30-year Treasury is higher than the yield for the shorter-term Treasury. There is an opportunity cost associated with lending your money over 30 years. Investors expect a higher rate of return. When these treasuries are plotted along with their associated yield, this is what is called the U.S. Treasury Yield Curve. And typically it slopes upward from left to right. When the yield curve is steep, it's an indicator of stronger economic growth. And when the curve is flat, it's indicating that investors are losing confidence in growth. So what happened last week? The yield on the 2-year Treasury was more than the yield on the 10-year Treasury. This is what is called an inverted yield curve, and it is one of the most damning indicators of confidence in the long-term growth. Now, before you start making decisions based on this information, please remember, I'm not a financial advisor, and this is not financial advice. But if you are a homeowner or considering a home purchase, this is information that I believe is really important for you to understand. Yet, even if the U.S. does enter into a recession, it doesn't necessarily lead to a housing market crash. Of course, after the great financial crisis of 2007, home values depreciated significantly. But in the previous 2 recessions in 1991 and 2001, home values remained stable and in some cases increased. So what's my take? I think it's important for all of us to be aware of what's happening in the economy, and especially for the housing market to understand what's going on with interest rates. But I'd be really hesitant about trying to predict what will happen in the future and acting with any degree of certainty.